And welcome back to Bitcoin Advisors channel. I wanted to cover some news today, starting off with the SEC chairman, good old Mr. Gary Gensler at it again. Crook in the, I mean, just looks like another crook, just like Janet Yellen, Joe Biden, and Jerome Powell. They're all a cesspool of lies out there. And here's what they're talking about. The SEC Kardashian fine was just a dumb publicity stunt. They're trying to scare people out of crypto again and trying to, use a big name to throw slander on the crypto industry in general. He made this big public announcement about, fining $1.26 million. I mean, Kim Kardashian, that's chump change, toilet paper for her. And the same thing for Mr. Gensler, 1.26 million, 1.26 million. What is that? You can't even get a mailbox in California for 1.26 million. So shame on you, Mr. Gary Gensler. Go back home, retire, and, laugh to the bank because we all know you're getting paid. All right. What else happened that I wanted to bring up? We've got earnings coming out this month. And the important timeline to be looking at, does this say August 8th? Wait, we're in October. We want to see September earning, we want to see the September calendar for earnings. Nope. I am not a Twitter expert. And that is some other news today, Elon Musk, but I'll get into that in a minute. The bottom line with the earnings, guys, is the important earnings are coming out towards the end of the month. Towards the end of the month. These are the guys, they're supposed to have the chart for earnings. Where is, this is October 3rd. No. Here it is. Boom. So earnings, the important earnings to be watching out for, I think are going to start towards the latter part of the month where you've got some of the bigger firms like Bank of America, Netflix, IBM, Verizon, just all these companies' earnings are going to be coming out towards the end of the month. And I would expect earnings are a bit down, especially given the inflationary environment that we are in. What else happened today? So today, initial jobless claims came in hotter than expected at 219,000. Hotter than expected, and that was supposedly good news, but bad news, right? As it implies what the Fed is doing is helping out with inflation. And on the back of yesterday's news, job openings came in lower than expected. They were expecting like 11 million. It came in at 10.1. So, but here's the real problem here, and we talked about this. The Federal Reserve said they will not stop the rate increases until job openings and job quits rebalance. So let me ask you this. How many job openings versus job quits do we have right now? That's 219,000 versus 10 million job openings. So let's do a little math here, just because I'm not good at math, using round numbers. Bust out the calculator here. 10 million job openings divided by 200,000 people who just quit. So for every person that just quit, there are 50 job openings. Does that sound like a rebalance to you? No, it does not. Something else to be aware of on the economic calendar. We've got two important dates next month. October 12th, PPI is going to come out. And let's just take a look at what PPI is. When it comes to commodity supplied, supplied for personal consumption, capital investment, government and export producer price index for demand is used in the United States to measure price changes. It is composed of 6 main price indexes: final demand goods, trade services, transportation warehouse, final demand less trade, transportation and warehousing, final demand consumption, and overall final demand, whatever that means. Bottom line is a higher than expected figure would be seen as bullish for the USD, while a higher than expected figure would be bullish for the USD, and while a lower expected figure should be negative for the USD. So, going back to the calendar, positive. So we go from negative 0.1% to 0. So again, all these reports, it is the expectation versus the reality. So we'll be following up that on October 12th. But in a sense, and that is a polish, or that is a positive. If you go to negative to 0, that would be bullish for the US dollar, bearish for Bitcoin. Bullish for the USD, bearish for Bitcoin. If it's negative or comes out worse than expected, that would be bearish for USD and bullish for Bitcoin. The other one is the inflation numbers that are set to come out. When is the inflation rate? Yep. Expected to come in lower than expected. So from 8.3 to 8.1%. And we already know what that means. Last month, inflation was expected to come in at 8.1%, and we came in at 8.3. The same number here, interesting enough, consensus is at 8.1%. So if we come in anywhere higher than consensus, I'd expect quite a bit of a tumble to happen. And when is October 13th? I'm going to put up my, I'm not going to put that calendar up. Calendar. I want the calendar, not the calculator. Okay. So what did we say? PPI and PPI is coming out on, so Wednesday and Thursday next week are going to be the big days, right? Yeah, Wednesday and Thursday, those meetings, 5:30 a.m. I will be in, hopefully getting in some live streams here so we can watch this stuff as it happens. And that'll come in 5:30 a.m. as well. So core inflation and the inflation rate, definitely going to, so core inflation expected to be hotter than the previous. And so they're fluffing all the numbers anyways. So we'll also have jobless claims coming in that day. Interestingly enough, what else did I hear today? Celsius founders withdraw 56 million. Let's see if I can get that article to, there it is on Bloomberg. So the Celsius bosses run out with $56 million in crypto before filing for bankruptcy. How? Before suspending customer withdrawals from the platform. How convenient, Mr. Machensky. Sorry to hear about that. That's probably not going to line up for a good financial future for you. And the other big story is the bond market. Let's see. How would we phrase this? sovereign debt crisis. Right, with the dollar skyrocketing, what they're talking about is the fact that they're not, oh, this is October 30th, 2021. So I guess they had a crisis back then as well. But they're not going to be able to pay back their loans, right? So apparently these guys borrow a lot of money and they are not going to be able to pay it back in dollars, which means they default on their debt, which means more bailouts, which means bank, seizures. And ultimately, I think it's leading to the writing on the wall of a central bank digital currency. So sorry I don't have the article up today. Let's see if we can get something to pop up here. Anything as of today, July 14th, 2 days ago. Reuters, which apparently Reuters is not the most reliable resource. This was back on October 3rd. Cheap money reveals global debt problem. Oh, yes, we got to accept the cookies now. So the global financial crisis in 2008 was supposed to have taught the world the dangers of excessive debt, but borrowing has shot up since then. The debt of governments, companies, and households was 195% of global GDP in 2007. By the end of 2020, it had reached 256%. Debt has risen for three reasons. First, governments bailed out the financial system. Then they supported households and companies during the pandemic. Now they are cushioning the blow of eye-popping gas and electricity prices. What is it going to be next? Putin, is he going to hit the nuclear button? And what else? China's has this real estate, problem. Massive problem in China. Apparently, the Chinese government makes you pay for your house before they build it. And so people paid for their houses, and now they're not building the houses. And people are rioting. People are protesting. So big problems coming up into the midterm elections. Hopefully, people learned this year that Sleepy Joe and the rest of his cronies are not the answer for U.S. prosperity. All right, that's it for today, guys. Hope you have a good one. Take care.